Hey traders, Nick here. I'm trying to make sense of the action for you after an incredible day. This is my third attempt at recording it. It went too long the last two times. So I will start with the conclusion, okay? First of all, a reminder that the bears are still in charge on the higher time frames. Respect that. That means by definition, they will sell the rallies. Where? I will get to that in a second. That's first, the warning. The reminder. The bears are still in charge. Therefore, the rallies, by definition, will be sold. We will discuss that later. So, the conclusion from today's price action is that we learned nothing new today. The CPI was a little bit this, a little bit that. Doesn't matter. Why? It did not change the facts. What are the facts? We have high inflation. That's a problem. We also have the Fed fighting the inflation at the cost of breaking the economy. That's a problem for stocks. One is a problem for us. The other one is a problem for stocks. Those two things did not change. What you felt 2 days ago should be what you feel going forward. Aside from the fact that a candle that looks like this caused you to go, there's no doubt in my mind. So here's the rarity of today. Let me put it in plain, simple English. Today, the bulls had extreme losses and extreme wins. Here's what makes it rare. The bears had extreme wins and extreme losses. You don't see those often. I don't. Not to that effect. Also, the travel distance of the market on the S&P, last I checked it somewhere here, was like 13%. Yes, the equivalent of a drop or a rally of 13 percentage points in linear terms. In other words, from here to here and back down to here and back up to here and back down to here and back down to, it's like 13 points, 13 percentage points. That is huge, huge. So here's one thing that didn't happen. The VIX did not fall as much as it should. So whatever I felt 2 days ago, I should continue to feel now. Ignore this. See, can you ignore this? Ignore this. Then what happened? Just a rebound, a rounding attempt to round the bottom. This caused a flash crash with heavy volume, and I will speak to that in a second. I'll tell you now. It becomes imperative to not lose the lows of today, especially on the small caps. This is a low that the bulls must hold. So you've heard for a couple of weeks, 35.20, 35.20. If we don't do this, 35.20 comes fast. If we don't do that, 35.20 comes fast. Guess what came today? 35.20. We bounced. Boom, right off of it, right? So you lose 35.20. The secondary targets will come into play. Which ones? I'm going to show you those. You've seen these charts every morning. These charts are in your inbox. Every morning I post them in the chat room. So, whoops. This has been there. That goes with that yellow line. I've been saying the bulls this week need to recover this orange, which is the June low, and the yellow. So now we're talking charts. First, I told you the conclusion. Nothing has changed. I should stay the course. This is a rounding bottom attempt. Ignore this, except for the fact that now we have a trigger right down here. And I will put it right now. And this is the target. If we don't recover these two lines, especially the yellow one up here. Important neckline that bulls need to recover and hold tomorrow, Friday, and Monday. So if they don't, we are above it. We may close above it tomorrow. That would be step one. If we don't and we come back down, we're probably going to here, which is the middle of the 3400s. Okay, so now you're on notice. 35.20, check. 34.50 could be the next if depends on how we deal with the next few days. This as well has been on record at least from the 2 days ago, 11th. Today is the 13th. From 2 days ago, I put this. This was one day's event on 9/15. I said, it's starting to look like 9/15. So I brought the September 15th price action and it pointed to here. Well, that's where we bottomed today. It didn't happen in one day, but that's where we bottomed today. So this means that I even had this note, price path from 9:15, beware of this possibility, on the 11th. Go look in the morning notes. So it's not a surprise that we got there. The violence with which we got to it is the surprising fact, right? So the headline did not create a new price path. It just got us to where we were going to faster than normal and with more dramatic fashion. So how do I deal with this? So I told you it is imperative now that we hold the low. That's going forward. That's what I'm looking for. I told you the premise is that the bears are still in charge. So they're going to look to sell it. Where? Let's zoom out a little bit to a 30-minute chart. Actually to a one-day chart. So this is what everybody looks at. The rally is going to be tried to be sold somewhere around here. So in the next 2 days, the bears are going to growl. How well they bring us down, that will determine. If they bring us down and lose this, we're going to continue on much lower. You heard that. Because they're going to keep doing this until we cry uncle. So it's easier to see in the IWM. The small caps, I told you to focus because they bottomed first. The small caps, I told you to focus on because they're doing better than the June lows. Well, guess what happened today? Look at that. Nice, neat line. And it's easier to lose than the S&P. I believe that if the small caps, the IWM, RUT, whatever you look at, lose today's lows, they trigger a head and shoulders that will bring in 25 points at least drop from there. So 140 or lower will become the target with them. They will be sellers here. They will try to sell the small caps into 175. So tomorrow, I would probably sell a credit call spread to fade that because they're going to try to sell it. Where they go is the important part. If they hold Thursday's low, let's call it the Thursday CPI low. We got to find a new name for it. They will start a debacle. Because then they will bounce and lose it and bounce and lose it and bounce and lose it. What is that here? I have it. Oh, there's a gap down here. So yeah, 152, 140, whatever. Call it whatever you want. So let's recap this video's content. First, nothing new happened. Second, an incredible day like I haven't seen ever, maybe for a long time. Third, the bears are still in charge. Therefore, they will try to sell the rallies. If the small caps go above 176.5, they will have breathing space to get another 10 points. So if they take this out, they get another 10 points out of it. That gets them on track to start making the turn. Conversely, if they lose today's low, they will continue on lower to lose 150 and close the gap that's down here. So what do? I continue to manage my risk. You saw I've been choosing good stocks at low levels. And you know what happens? When they rebound hard. Example, Amazon. It was in trouble this morning, 105. I said, I have no problems owning Amazon below 108 and break even at 105. I have no problems. By the end of the day, it had already touched 114 and it closed at 112. More, 112.50. That's testament that there is value. There are people that see buying opportunities. So it's not buy all the way up to the moon. Although Kramer did cry uncle today, so that maybe he's the last buyer on record that capitulated. But it is not time to sell Amazon. So the opportunity is still to nibble on good stocks at good levels and partial positions. That has been my method. So that's what I'm doing. I'm accumulating good stocks for a long-term investment, and it could be a short-term swing in the meantime. I am also accumulating some crypto, and I'm selling some call spreads against them and some put spreads. And if you're active in the live room with me, if you're lucky enough to be able to be there, there are opportunities that I can't share in writing because they're active, and intraday, those are pretty fruitful as well. So that's the strategy, has not changed. You've been updated, and I'll try to update you again tomorrow if there needs be.